Hello and welcome to the day ahead. It's March the 3rd. I'm Nadine Blaney. Well, global markets have staged a comeback as the crisis and fighting in Ukraine continues to escalate for a seventh day, posting a challenge for central banks and the already hot inflation story. U.S. Fed Chair Jerome Powell staying the course, testifying to Congress that rate hikes are coming despite the uncertainty around Ukraine.
I do think it will be appropriate to raise our target range for the federal funds rate at the March meeting in a couple of weeks, and I'm inclined to propose and support a 25 basis point rate hike.
Gold slipped on the improving sentiment with U.S. Treasury yields up from 8-week lows as investors weighed up how aggressively the Fed will actually be in rising rates. Traders now see a 5% probability of a 50 basis point rate hike at the March meeting, with a 95% probability of a 25 basis point hike. Looking at the boards from overnight, Wall Street higher across the board with the VIX index retreating from its recent highs. Now, in the political arena, focus remains on Western sanctions and energy. Oil continues to surge, breaking through the $110 a barrel handle. This as U.S. President Joe Biden used his State of the Union address yesterday to reiterate the state's commitment to crippling the Kremlin and ensuring oil prices are capped.
We'll join our allies in closing off American airspace to all Russian flights, further isolating Russia and adding additional squeeze on their economy. The United States has worked with 30 other countries to release 60 million barrels of oil from reserves around the world. America will lead that effort, releasing 30 million barrels of our own strategic petroleum reserve. And we stand ready to do more if necessary, united with our allies.
Now, looking at the bigger picture, the euro touched a 22-month low against its U.S. counterpart as the divergence between the U.S. Federal Reserve and the ECB resumes. February eurozone inflation surged more than expected to 5.8% year on year, sending market expectations of a rate hike from the ECB through the floor. In stark contrast, the Bank of Canada hiked its official rate for the first time since October 2018 by 25 basis points, with a hawkish tone to the statement, setting the stage for further tightening to come. Stateside, the ADP private sector employment report jumped by 475,000, blowing past expectations of a more modest expansion of around 388,000. And according to the latest Beige Book, the economy expanded at a modest to moderate pace from January through mid-February. Here is what we are expecting when trade gets underway here in Australia. Expected to track moves on Wall Street, with SPY futures up about 1% or pretty close to it. Currencies now mixed against the greenback, with both the euro and Aussie units recovering from recent lows, while the Japanese yen eased, as did volatility. Commodities is a big story and will be for the local market today. Gold fell back below the $2,000 an ounce level as oil surged again, and OPEC and its allies stuck by their long-term plan, lifting output by 400,000 barrels a day. Aluminium soared to a fresh record high as well, and spot palladium prices are continuing to rise, up another 3%. For investors here at home, though, the impact of the ongoing crisis in Ukraine is more one of confidence than anything else, and has yet to really dent equity markets.
And when you look sort of through it all, you try and unpick it, it really it sort of impacts confidence. But Russia, I think, is about the 11th biggest economy in the world. I think Australia comes in at about 13. So, I mean, really overall, what happens within that region isn't going to be enormously impactful in Australia or in the US, which really drives our market. So it's interesting. It's a tragedy what's going on, but the overall impact, I think, is more to do with confidence than anything underlying in the economy.
So we are keeping a watch on clearly the metals and the miners today, and the energy names as well, but also those companies trading ex-dividend. So we have Woolworths, we've got Coles, ASX, Nine Entertainment, and NIB, and that is just to name a few. Well, that does it for today's edition of The Day Ahead. I'm Nadine Blaney. We'll see you tomorrow.